Good morning, everyone. This is a live daily market outlook from Windsor Brokers. Today is 1st of May 2013, Wednesday, beginning of the new month. Public holiday in most of European countries, so we expect some rather quiet movements during the morning session, the European session, as most of the European markets will be shut for the Labor Day. However, much more action as we're expecting in the afternoon with the top releases coming from the United States, where we have the one of the key releases of this week, Fed's monetary policy and rate decision. Before this, we have the ADP non-farm employment change, the initial indicator basically for coming U.S. non-farm payrolls data that are due on Friday. So three very significant releases are seen this week, starting today with the Fed FOMC decision. Then tomorrow comes European Central Bank with quite wide expectations of possible rate cut tomorrow, and of course the Friday's U.S. non-farm payrolls data. This is the first Friday of the month. Markets moved in a way that the shortest way to say the dollar is significantly lower against the basket of major currencies due to waiting for the Fed's decision, which is quite likely to be. These are the widest expectations to be again mild, with the comments to be dovish basically, and with the comments of possible ending quantitative easing. As said, dollar depreciated against most of the major currencies, and with the unexpected contraction in the U.S. Midwest business activity data shown yesterday, now fund expectations of a slowdown in the U.S. economy, sparked by a run of soft data in the recent weeks. Even though figures of U.S. home prices and consumer confidence were quite robust, the data came as Federal Reserve policymakers, gathered for their monthly two-day meeting that ends today. Amid talk, the central bank might have to add more stimulus to help broaden a still patchy economic recovery, and expectations as set is again some quite dovish comments from the Fed. This is as set the most interesting release for today. Just a brief look at the markets. Euro holds steady around 131.70 after hitting yesterday's fresh high, just few ticks above this level. Sterling corrects lower, but still above 155 level. 155.67 was the highest seen yesterday. Dollar yen in slight corrective action during the Asian session of yesterday's low at 97.00. Not much expected so far towards the upside. Dollar Swiss remains under pressure and holds still below 93.00, consolidating just under this level following yesterday's fall to 92.77 fresh low. This is approximately 76.4% retracement of the entire rally from 92 base. Aussie dollar remains steady after hitting fresh high yesterday at 103.83, with the corrective action allowing dips down towards 103.30 in order not to harm the immediate bulls, with the target still valid at 104, our key near-term barrier. From commodities, crude oil pulls back off yesterday's high at 94.66. This is still to be seen as corrective action, as we have quite good supports still intact. Initial one is around 92.40, and then 92.00 is psychological, and then 91.80, which is 55 days moving average, seen containing dips for now. Of course, more of this we're going to take a look in our technical part, while the yellow metal remains still within the triangular consolidation, directionless. There were some movements yesterday below and above the triangle support resistance, but so far nothing has been produced out of this. The price is in even more narrow range. We are talking about some 10-15 ticks movements with the unclear situation at this point, firmly neutral tone. We can say that break of either side would establish fresh direction. Initial resistances 1479 and support 1460, while above we have 1482.85, and on the downside 1448 seen as a break points. From today's calendar, that as said is empty for the European session, but quite busy in the afternoon. Releases that already came out are from China. Manufacturing PMI came in slightly below the expectations, and the previous release actually 50.6 was actual release compared to 50.9 of the previous one, and 50.8 forecasted, with commodity prices in Australia improving slightly -6.5% in April compared to -7.5% in the month of March. Still to come, manufacturing PMI from UK for April. 48.6 is the forecast versus 48.3 in the month of March, still below the 50 break point. And then data from United States, ADP non-farm employment change data for April are due at 12:15 GMT, 153,000 new jobs, slightly below the previous month release at 58. That would be indicator that possibly no significant movements will be seen on Friday's data. 150,000 are forecasted in average for Friday's non-farm payrolls data, compared to very disappointing 88,000 released in the month of March. Any improvement will be very welcome, but still U.S. jobs market is still the most painful point for the U.S. economy, and as long as there is no sustained progress in this sector, the recovery of whole U.S. economy will be under question mark. Further in the afternoon, 1300 GMT, we have final manufacturing PMI from for April, 52.1 versus 52 previous release forecast versus the previous release. Construction spending for March at 1400 GMT, 0.7% below the previous month release at 1.2%. ISM manufacturing PMI due at 1400 for April is forecasted 51.1. This is below the previous release of month of March at 51.3, while manufacturing prices are forecasted at the same time at 52.6, well below 54.5 previous release. Crude oil inventories are due at their regular time at 14:30 GMT. We don't have forecast in 1.2 million is seen forecasted, so we are going to add it right now. And this is all that it's due before the FOMC release that pardon, comes at 1800 GMT time. The rates are expected to stay unchanged at 0.25%. With the comments seen after will give us more clues whether the Fed is at this time more keen to do something, or it will still remain more mainly on the verbal action, as these comments about ending the quantitative easing persist for some time, and so far nothing significant has been done. The main focus, as said, is on the FOMC's today's release, so we're going to wait what's going to happen, and most likely, as I said, not significant action to be seen during the morning session, the so-called European session. As I said, most of the European markets will be closed today for the Labor Day. However, we're going to take a look at the technicals to see what we can expect on today's movements of the major currencies and the commodities. First one on the list is euro against US dollar. Hourly chart shows quite positive tone, those slightly extended conditions after the pair rallied strongly yesterday and hit a fresh high at 131.84. This is just ticks away from our initial barrier and the key barrier of the near term at 132.00, with the positive tone being established on the recent recovery rally from 129.50 and the sustained break above initial and psychological 130.00 as well as 131.00 support now heading towards 132.00. That may open way towards for a further extension. Basically, clearance of 132 is to signal a resumption of the larger recovery rally from 127.50.44 double bottom of end of end of March, beginning of April, with immediate target seen upon break of 132 at 132.27. That marks 50% retracement of the larger descent of the pair from February's peak at 137.10 to the beginning of March low at 127.44. So far, the daily structure remains well supported and positive, and sees potential for further extension higher as 20 days moving average now maintains the ascend, and the price already broke above 90 days one that opens way through 132 towards 132.27. Possible extension higher that would be looking for a test of next psychological round figure resistance at 133.00. Back to the lower time frames to see the support levels. Initial consolidation low, which is around 131.45, and it's reinforced by ascending 20 days moving average is seen as the first support. Then we have close to it 131.35, 38 previous peaks. Where do we have them? We have lost these levels. In any case, 131.35, and then 131.15 yesterday's, 2 days ago high, along with the 131.00. A break below 131 psychological support would signal a stronger correction with the next level seen as significant. This is yesterday's low at 130.53, or if we take a look at Fibonacci levels of the entire rally from 127.44 to 132.00, we have it approximately between 23.6 and 38.2% retracement. Or if we take the lower, smaller picture of the latest rally seen from 129.53 last week's low, then we have good support at 130.68, which is 50% retracement. Then the low of yesterday at 130.53. So in any case, any deeper reversal under 131.00 should ideally reverse somewhere around above 130.50-60 zone in order to keep the bullish structure intact for a possible fresh attack at 130.200 and the extension higher. As said, expectations of Fed's comments today are seen as dollar negative for now, as most of the analysts agree. So the potential for further extension of single currency is quite high. Of course, a lot depends now on the release of the FOMC later today. That will give us some more clues whether these gains of euro will be sustained or not. A reminder that tomorrow's release of Bank of European Central Bank and expectations of rate cut would be additional strong pressure on the single currency. So we might be also facing a stronger pullback after release of monetary policy decision of the European Central Bank that is due tomorrow. From the other pair, British pound against US dollar also remains very positive and supported at this point. 155.67 was the highest seen so far. This is yesterday's high, with the narrow range consolidation following and being supported by 20 days moving average above, still above, which is around 155.20, and holding above psychological 155. That at the same time marks daily Ichimoku cloud top, acting as a good support and expected to hold the downside protected. Any penetration through 155.00 of course would allow for some deeper corrective action where we're looking for test of 154.66. This is a low of yesterday, 30th of April, ahead of 154.17, 154.10 previous high, and the low of 26th of April, basically seen as a break point. Loss of these levels, as we can see it here, approximately 154.10, loss of 154, I would say. That is also reinforced by ascending 4-hour 55 days exponential moving average, would be a signal that bulls will be sidelined in favor of a stronger corrective action. Otherwise, stronger bullish tone that still persists on the lower time frames, despite some overbought conditions, keeps the upside in focus, and our initial target stands at 156.05. That marks 50% retracement of the larger 163.80 to 148.30 descent, with the 90 days, pardon, 100 days moving average at 155.58 currently. So far, limiting the upside. The action break of this is to open immediate target at 156.05. Dollar yen remains under pressure despite some brief corrective action seen this morning after a repeated attempt lower was contained at 97, yesterday's low. We see some basing attempt at this point, but not much prospect seen for the recovery towards the upside as long as we hold below 98.20 levels. This is approximately 50% retracement of the down leg from 99.49 to 97.00, and the only break above 98.25. This is the high also of 29th of April. Would signal a near-term base and allow for a stronger corrective action. Also, that will be signaling a double bottom pattern that is by its nature bullish. So penetration through 98.25 would be a good signal for some stronger corrective action. From the other side, the more likely scenario at this point, according to the current structure of the near-term studies, more likely scenario would be a lower top with ideal cap level somewhere around 97.70.80, where we have the yesterday's intraday high and descending 55 days moving average before the bears reassert for a fresh push lower, as the larger picture still holds a negative tone of recent upside rejections at 99.93, 99.87 and 99.74, risking of course the triple top formation. That will be confirmed mainly on a break below 96.95.80, recent low of 16th of April. So far the price dipped to 97.00, losing initial support 97.35, 61.8% retracement, and the recent low of 17th of April at 97.20. More focus is still again seen towards the downside with the 20.55 day moving averages bearish crossover, keeping the price action pressured with break below 97 to open 96.70. Previous high of the pair posted on 12th of March 2013, as well as 76.4% Fibonacci retracement, break of which is to give more signals of formation of triple top at previously mentioned levels and open way for a deeper reversal, where we'll be looking for test of 96 and 95.80. Conversely, any penetration above 98.25, as I said, would allow for a stronger correction. Aussie dollar holds positive tone following yesterday's rally that peaked at 103.83, and it's just ticks away from our next target and the key barrier at 104.00, where we have 50% Fibonacci retracement of down leg from 105.81 to 102.20, as well as previous high of 16th of April 2013. Positive structure is seen on the lower time frames and keeps the bulls in play, though some bearish divergence shows on the hourly chart on the RSI and the MACD, and this could be signal for some more significant corrective action. So far dips reached 103.50. This is the lowest of the session so far, and that marks approximately 23.6% Fibonacci retracement of the up leg from 102.61 to 103.83. With the 55 days moving average so far containing dips, the moving average is currently at 103.46. There is a basing attempt seen at these levels around 103.50, with the further dips allowed not to more significantly harm bulls down towards 103.36, 103.28. Basically, we have quite a strong support at around the 103.40, 103.30 zone. Peaks at 103.35, 38, as well as 38.2% retracement keeps the is expected to hold the downside and keep immediate bulls in play, along with the yesterday's low at 103.28. Any penetration through this support and another significant, which is 103 near 61.8% retracement, would sideline immediate bulls in favor of stronger correction. Otherwise, focus remains at the upside. The clearance of yesterday's high at 103.83 is to open the next a significant barrier, pardon, at 104.00, and they allow for a stronger retracement extension of the rally from 102.20, pardon, and stronger retracement of 105.81, 102.20 descent. And the final look at commodities. Crude oil is in the descending mode, correcting recent rallies that peaked at 94.66. This is the high of 2 days ago, and since then the price is in descending mode, though still shallow correction, as only 23.6% has been so far retraced, with initial support at 92.44, 92.00, still holding the downside. The later is reinforced by ascending 55 days moving average. It's significant that the price already broke below 4-hour 20 days moving average. That sees more potential towards the downside as the moving average pardon, turns towards the downside, while 55 days one now is moving sideways. That gives more signal for further pardon, correction, with the 4-hour indicators all being in the descending mode, and the loss of initial bullish momentum suggests that crude oil might undergo stronger corrective action before bulls reassert. This is about 4-hour chart. On the hourly, the indicators are already in the negative territory, and seeing again set more potential towards the downside, as bearish crossover has already been developed at 93.37, putting additional pressure to the price action. We can expect extension down towards 90 through 92. Pardon, 92.00 towards 91.30. That is 91.30, 91.10, 38.2% retracement, and a low of 25th of April, seen as ideal reversal point in case of any deeper dips of recent high at 94.66. And finally, gold. There is nothing significant in the near-term price action of the yellow metal, as shown on the hourly chart. The price is barely moving and is entrenched within the triangular consolidation, pardon, between the recent peak at 14.85 and the low at 14.48, with the narrowing range still unable to break either side. A neutral tone is seen on both 1 and 4-hour charts, with our 4-hour indicator still being slightly more positively aligned, but still lacking momentum for any more significant action. That require basically break above initial on the upside initial resistance high of yesterday's highs at around 14.79. That to open way towards the peaks at 14.82 and 14.85, or conversely a slide below the triangle support that is currently at 14.69 and break of the range floor at 14.60 is to focus downside supports. As said, quite neutral tone, still sees no firm direction. Of course, I would say more clear picture we will have after today's FOMC's decision, when we will have a most likely fresh direction for the yellow metal. So far it's entrenched within this narrow range, and the break of either of the key barriers on the downside 14.48 and on the upside 14.85 is set to give fresh direction. upside break above 1485 is set to open immediate barrier at 1487, that is 61.8% Fibonacci retracement of the down leg from 1590 to 1321. Conversely, break below the 1448 low of 26th of April is set to allow for a deeper reversal and possibly to signal an end of the current corrective action of 1321, with the next levels seen as important. 1438 is the previous high, and then 1404 previous consolidation low. Break below 1400 psychological support will be bringing bears fully in play, and refocus recent lows at 1336 and 1321. And this is all from my side. I think I spoke enough. Do you have any questions to submit? You can do it right now. Just a second. Let's find the loonie. Okay, we have it. You can see the screen now. Okay, let's start from the larger time frames. Basically, we have the range that is aligned towards the downside following the recent break below 10081, and the pair is basically threatening a test of parity level that comes close to a 50% retracement of the larger rally from 96.31. This is the low of 9th of September 2012, and towards to 103.40 peak of February, nearly peak of February 2013. Now the major pullback is looking for a test after losing initial support at 10081, looking for test of parity level, as well as 50% of retracement of the entire rally. This is also reinforced by 200 days moving average. We have this at 99.89, and the 99.86 is the 50% retracement. So basically break below the parity level, and levels just below there would be a signal for a stronger reversal, stronger corrective action of the entire rally, and then we'll be looking for a test of low of February 2013 at 99.31, and then 99.00 psychological support, and 61.8% retracement. Now on the lower time frames, quite a negative tone is seen on the hourly, so we can see that the pair is in steep descent, though the conditions are quite overextended and oversold. This could be signal for some corrective action, yet no any development towards this movement. So we have initial dynamic barrier 10073 at 20 days moving average, and then yesterday's high at 101.21. Before this, it's 101.55 days moving average. I would say lift above 101.0020 is to allow for some stronger corrective action. Otherwise, quite strong pressure is still seen towards the downside. A similar situation on 4-hour chart. The price and the indicators continue to point lower, despite being in the deep in the oversold territory. As we can see, the RSI is at 1697, well below 30 level. The MACD is also quite low and still pointing lower. The momentum is well below its range floor, and stochastic is pointing lower. So overall, we have quite a negative tone on the US dollar Canada, and seeing more potential for test of parity level. That is seeing the likely scenario in the near term. Any further questions, please? It seems no more questions for today. In that case, I would like to thank you all for being with us and expect, of course, to see you tomorrow. We're working regularly during these days, so no holidays. Markets are open and running in full speed. We expect to see you tomorrow morning, where we'll be commenting, of course, the Fed's release and the market reaction on Fed. Of course, we have the European Central Bank tomorrow and the US non-farm payrolls on Friday, so a lot of action ahead and a lot of movements in the market, I assume. Wish you a nice day today and, of course, good and profitable trading. Good luck.